I'll request our Central Council member is amongst us. A little later he will be really guiding us. He will be guiding us how the day will pass through in the first half. The knowledge really is an edge for all of us, and when we share the most demanding subject, the direct text, so naturally you know the changes now and then it matters, and updating on those things is really need of the hour. Before starting the technical session, I request our Vice Chairman, C.A. Raj Chawla ji, for the formal welcome address in the absence of the Chairman. Chairman may be joining, Visalkar ji may be joining at any moment. I will request our Vice Chairman, Raj Chawla ji, for the formal welcome address. Raj Chawla ji.
Good morning, friends. On behalf of Team NIRC, I, Raj Chawla, Vice Chairman, welcome you all in this seminar on direct tax. Friends, first of all, I would like to wish you all a very happy and prosperous new financial year. On the very first day of this new financial year, we are organizing this direct tax seminar to appraise our members about incidences in penalties and proceedings and issue in relation to HUF and family partition. I welcome both speakers, Dr. Rakesh Gupta. I also welcome our Central Council member, C.A. Sanjay Agarwal ji, who has agreed to chair this session of today's seminar. Friends, today we are also felicitating our Honorable President and Vice President and Central Council members after lunch, which will be followed by annual award function. You all are requested to please be there for this annual function. Now, without wasting much more time, I hand over this mic to Dr. Rakesh Gupta ji for the further proceeding.
Brief us the first half, activities of the first half. Sir.
Thank you, Chupsa. Very good morning to every one of you. Seeing here on the first day of the financial year, leaving your office here, getting for some updation in the technical topic, and that too we are starting with the. Let me tell you, when I am here as a Central Council member, this year you may ask my President that why he has given me a portfolio for which I have never been in practice for the last 26 years. Today I am a Direct Tax Committee Chairman. Last 2 years I have handled with the Direct Tax Committee. I asked this question to him. So he gave me a time of 90 days. He said within 90 days I want to see you in this dais speaking on indirect taxes. So this is how now this year I need to sell indirect tax. So I will be talking about the indirect tax more in all direct tax conferences also. You see, this is a new council, 22nd council. ICAI Sudesh, welcome. Few of the challenges we have with us. The council is looking into the fact of the bank audit also. Though it has been allotted, but still the efforts are going on from our side also. And the company's bill is one of the another challenge. We are looking into this fact that how we can dilute whatever has come and how we can safeguard our members' interest. And we have been assured by Ministry that in the rule-making process they will look into all those things, the concerns of the profession which we have referred to them. So far as the activities in the council is concerned, it is only the first meeting has just, you can say, adjourned. It is for the 10th and 11th of this month. 3 days we have dealt. This year the target which has been fixed by the President, he will be deliberating in the second half before you, because President is the only spokesman of the council. But we have decided that this year we will finish it out most of the disciplinary cases which are pending with the ICAI for the last 10 to 20 years, and we have disposed of a lot of them. Few of them will be there, and within 2-3 months we will try to dispose of all old cases in the disciplinary. So far as the representing the government authorities, I have been made the chairman of the Public Relations Committee also. And this year, with both the committee being chaired by me, we will try to bring out as many as dignitaries on this dais to tell them as what we are doing. Normally the problem which I have initiated is this, that we are not bringing these authorities to our forum. Because when we discuss certain topics which are on academic side, we discuss certain things which we do not want to share with them. But in any case, the inaugural sessions are there, the valedictory sessions are there, where we can bring these authorities. And I will request the officiating chairman here, sitting, that in every seminar we should try to get few of these authorities, at least they should know what we are doing and what type of the activities we are doing, because it is only the amongst members we are circulating these things, but the outside world doesn't know that how much efforts we are making in everything. Anything which comes to the government, they ask us to prepare. Just like today, in the morning, I have to attend a conference with the senior advocate, because one of the matter of the member being won in the High Court in Madras, now it is being challenged in the Supreme Court regarding the limit fixed by the Council in respect of the tax audit, as to why this limit should be there. And I have to go and brief it. So this particular activity, what we are doing, that is not known to the outside world. It's known to only amongst ourselves. When we tell them that what we do, what type of the activities we are carrying, how we are helping. You see, when I represented for the first time in the Finance Ministry, at that time I was one of the members of the Directors Committee only. Since my chairman was not there, so I have to go on behalf of the chairman being a Delhi member. So the first thing the ministry asked me, that you always come and you ask for some relief for someone. You have never tell us how we should increase our revenue. So that was my first learning which I learned is this, that they will be happy only when we tell them how to increase their revenue. If we are going to buy, we are going to tell them that you give this relief to this one, or this relief to this one, or this is the difficulty faced by one industry or others. For that, industry people will be there. So next time when I have gone there, the first 7 suggestions which I made was only to increase the revenue. And out of that, 1 suggestion was accepted by them, and that suggestion was later on could not get the courage in the parliament. That was in respect of immovable property, a tax being levied on the immovable property. I am telling you with full conviction that that was the suggestion of your committee. Then again, when the next time I went there, I said, last time I said these are the 7 where you can increase your revenue, but there are 124 suggestions which I gave in respect of reduction of the litigation. Though Gupta ji is here, he is an advocate, but he is our member. But let me tell you, nobody is interested in litigation. If you ask any businessman, he will say, I want to buy peace. I should have a clear-cut law which is laid, and there should not be anything which I should get after 5 years or 10 years. So I gave them 124 suggestions in respect of reducing the litigation. Then I am happy to tell you that this year they have announced for a reform commission. I don't know what will be the constitution, how it will work, but at least they have announced a reform commission. The reform commission will look into all those things which are there in last 6 months. Whatever is going on, if suppose there is a dispute which is going on in respect of share capital, then the government must come with a clarification within 6 months on this side or that side. It is different that if I am contesting that, I want to contest, but I don't know what is the stand of the government. Then after 20 years, what will happen? This penalty and prosecution will come. And 90% of the litigation are only to avoid penalty and prosecution. I am telling you it is a fact. If today, if you ask me why I am doing an appeal, why I am making an appeal, there are only 3 factors. Either the interest portion which is too high, or which is the penalty which is too high, and then if I accept any penalty, the question of prosecution will come. I will request Gupta ji to tell about the various provisions. If suppose somebody reaches to the prosecution and still there are chances, there are, you can say, compounding provisions are there, if at all that can be also deliberated here a little bit, if not in detail, as to if there is a provision where we can go for the compounding of the offences also. So this is also important. Rest I am before you. I am available 24/7, always available. You can call me at any time, but please call me only from mobile. Rest of the things we can talk during the informal interaction. I request the MOC to take that decision. Thank you.
I would like to request our guest speaker, CA Dr. Rakesh Gupta ji, to deliberate on this subject. Thank you.
Technical session. Our Central Council member, Mr. Sanjay Agrawal, Vice Chairman and other office bearers of NIRC in the district presence. March hangover is clearly evident by the sheer numbers of our presence here. But I am quite sure as the day progresses, we will keep on swelling. But I find it very distinct that the balance is tilted extremely towards right. And that may be because the center of gravity was with reference to that speaker, but then this speaker is speaking while sitting. But that balance is still tilted towards right for this reason, that the chartered accountants are always right. Friends, the topic, though certain guidelines have been given by my chairman, but I will approach today's topic from a different perspective. I will discuss about the rationale, the jurisprudence, the principles, and then those principles lead to what propositions. And by taking care of those propositions, how do we make our responses to the penalty, particularly 271(c)? Because if you ask me that name one of the most draconian provisions of the Income Tax Act, I will say certainly it is none other than the penalty proceedings under section 271(c). Because as Sanjay ji, as my chairman has told very rightly, that the acceptance of penalty gives a very strong foundation for the department to launch prosecution. So we somehow want to shrug off the consequence of the 271(c). At the very outset, we must understand that the penalties are the teeth to any legislation. Without penalties, without the teeth, it is very difficult to exact the compliance. Penalties are like sanctions. We often hear that the UN has imposed sanctions against Iran, or for that matter against Iran, or now against North Korea. So the penalties are like sanctions, and the objective of the penalty provision, of course, is to exact compliance. Unless you create disincentive for the non-compliance, the people would not come forward to comply, because to take out money from one's wallet is not an easy job. I always say that the first thing which we are concerned is our health. And once after our health is alright, then we are concerned with the health of our pocket. So when somebody tries to take out a share out of our pocket, it pinches us. And when we try to wriggle out from that pinch, and because of that the tax is evaded, then obviously the consequence in the form of penalties has to be there. So penalties have necessarily to be provided in any statute to give the element of teeth. The second objective of the penalty provision is to send a deterrence message, that those who are prone to commit defaults should know that here are the provisions which will take care, and therefore if you have got that kind of a bend of mind, better beware. That is called the deterrence message, which is very important for any provision to remain on the statute. But then the objective of penalty provision is not to break the text. The objective of the penalty provision is to bend the text. And at the same time, to seek the compensation to the state, because the state has suffered an injury. Because if somebody attempts to evade tax, it is the state, it's the public at large, it is the exchequer which suffers the injury. And therefore, the penalty provisions are built into the scheme to compensate the state on account of the damage which is occasioned to it because of the attempted evasion. And the objective of the penalty provision is to render the tax evasion unprofitable. I remember you must have witnessed it while doing practices, the scams. One of the scams was the long-term capital gain. People did not earn the capital gain, the people received the capital gain. They took the capital gain. And when the capital gains are taken, then obviously the department becomes proactive. Proceedings were initiated, 148 were resorted, cases were reopened, tax liabilities were fastened, and then obviously the penalties were imposed. And I remember a very upright DDI, he told me, Rakesh, I want to see and ensure that this tax evasion attempt in the form of long-term capital gain, I create these many kind of litigations qua necessity that he finds himself that to evade tax is an unprofitable proposition. So the penalty provisions are there to take care and to ensure that the evasion of tax becomes an unprofitable proposition. Now be that as it may, I start this topic of today from a different perspective. As I said, I will speak certain propositions. I will speak first of all certain jurisprudence principles as to what is the genesis. What is the genesis of the jurisprudence? Those jurisprudence leads to what propositions? And if those are the propositions, how to counter? How to prepare ourselves? What should be our tailor-made response? So I will approach this topic. In fact, I had an occasion to deliver this topic in one of the regional seminar organized by Lucknow Dehradun Chartered Accountant Society. They gave me this topic then and there, and in half an hour I had to prepare it. So this is the second occasion when I am repeating my this deliberations, and I am quite conscious that I am before the August gathering of seasoned professionals. I need not to dwell upon here as to what are the various penalty provisions. So I have devised my own way to approach this topic today. So first of all, we must be aware, and we are, but at the cost of repetition I would say, that whether a person has concealed the particulars of income or has furnished accurate particulars of income is essentially a question of fact. It is not a question of law. Why I am saying so? Because what do I see most of the times? We as a practicing chartered accountants kindly keep your mobiles to the vibration. It obstructs the free flow of my thoughts. So, penalty for a situation where a person is found to have concealed the particulars of income or furnished inaccurate particulars of income is essentially a question of fact, not a question of law. Why I am saying so? Because most of the times we rush in the shelter of law without establishing on fact that here is a case where my assessee has neither furnished accurate particulars nor concealed the particulars of income. I, as a matter of fact, first of all must establish on facts. That is why this principle that a person has concealed the particulars or furnished accurate particulars of income is a question of fact. And that is why most of the times what do I find? Kindly see, sir, Honorable Supreme Court in Reliance Petrochemical has said that, oh, the Reliance Petrochemical will come later. First of all, they must show now whether as a matter of fact, my SSC has concealed the particulars of income or has furnished the accurate particulars of income. Because we cannot remain oblivious. We cannot forget that propositions which was echoed by Supreme Court number of times, in which the Supreme Court said in some engineering case that each case is based on its own particular facts. And therefore to import and to work a particular proposition beyond its facts is bound to lead to miscarriages. Therefore, we will try to drop, I am not suggesting even for a moment that we should not quote the case law of the judicial decisions merely for this reason that this penalty is a question of fact. But what I am saying, that first of all we must establish a fact. Later on, we should match the parity of facts of my case with a case which we are seeking to rely upon, and then we must convince. Therefore, the first principle which was got in mind is that it's a question of fact. It's not a question. Therefore, when an assessing officer initiates penalty for a situation where certain cash credits or certain gifts accepted or received by an assessee are added under section 68 of undisclosed income of an assessee, then first of all that assessee during the penalty proceedings must establish on fact that my assessee has not concealed the particulars of income, and as a matter of fact the assessee has brought forward necessary evidences to establish his own case. He has tried to substantiate it. Now that is a different matter, that the substantiation has not been to the extent so as to meet the ingredient of section 68, but it doesn't mean that the penalty should be imposed in such case. Therefore, the first principle which we must always bear in mind is that whether an assessee has concealed the particulars of income or has furnished inaccurate particulars of income is essentially a question of fact. The second principle is that we often hear that the penalty proceedings is a quasi-criminal proceeding. When we say the quasi-criminal, that means it is neither criminal nor civil act. It falls somewhere between the civil and the criminal. So if it is criminal, then it has got different connotations. It leads to different propositions. If it is entirely civil, then it has got the different propositions. Therefore, this jurisprudence principle that the penalty is quasi-criminal in character, after all you are going to penalize a person for a default, and the nature of this penalty proceedings, whether it will be civil or criminal, came up before the Supreme Court in a very old decision which is reported in 76 cited in Anwar Ali. Anwar Ali's case is a very important decision in the realm of the penalty provisions. Supreme Court said the penalty proceedings are quasi-criminal in character. But then later on, because the law keeps on evolving with passage of time, the Supreme Court reiterated, though it is often said that the penalty is criminal and quasi-criminal in character, but then we cannot lose sight of this fact that even if it is quasi-criminal in character, but then they are essentially of civil nature. In the Vendra textile, the Supreme Court said, though they are quasi-criminal, often they are considered a quasi-criminal, but then since they are within the jurisdiction of the civil jurisprudence, therefore they are essentially of civil nature. Now, if this is the principle that they are quasi-criminal in character, then it leads to what? And then I will try to correlate those propositions with practical facts application. The first consequence of this principle is that since they are quasi-criminal in character, therefore the rule of strict interpretation, the rule of literal construction will have to be followed. Had the penalty been of civil nature, probably this principle or this propositions would have been diluted. But since they are quasi-criminal in character, they have brought the tangent of criminality into it. Therefore, the courts have said, since they are quasi-criminal in character, therefore, we will apply the strict rule of literal interpretation. There are literal rule of interpretations, there are purposive rule of interpretations, there are mischief rule of interpretations. So, the court said, since we are interpreting the penalty provision, they inflict quasi-criminal consequence upon an assessee, and therefore when we are confronted with this kind of a language in the statute, therefore we will see what the Parliament has said in very clear. And if the Parliament has failed to use the appropriate expressions, if the Parliament has failed to use the appropriate expressions in the penalty legislation, then the penalty has to suffer. I am reminded Justice Kuldeep Singh, who became the Supreme Court judge, right from the bar to the Supreme Court. It was the third occasion in the history of free India, rather second occasion at that time. The first, old Justice Sikri, second Justice Kuldeep Singh, third Justice Santosh Shetty, who was elevated right from the bar to the Supreme Court. And I don't know how many of you know that in order to become a High Court judge, one has to be a lawyer. But in order to become the Supreme Court judge, one need not be a lawyer. He must be a person of eminence. That is what the Constitution provides. But anyway, I was on this, Justice Kuldeep Singh was elevated from the bar to the bench. And after his elevation, his accumulated fee as a lawyer was received by him. But he received when he became the judge. He did not offer it to tax. On this ground, that this fee which has been received after the discontinuance of the profession is not chargeable to tax under any provision of the statute. Matter was litigated by the department because the department cannot, even if you are a judge, for that matter you are the President of India, but then you are not above law, unless you are the Italian marais. So, the argument which was convinced on behalf of Justice Kuldeep Singh was that if you read section 176 of section 3 capital A, which talks about the discontinuance, the receipt after the discontinuance of profession or business, it doesn't cover the discontinuance as a result of elevation. It says discontinuance as a result of tax. It says the discontinuance as a result of retirement. A person who was active in bar, who is active on bench, cannot be said to be retired. Therefore, if the legislature has failed to use appropriate expression in the statute to cover this fact situations, to bring it within the tax act, since the legislature has failed, therefore the tax also has to fail. Now this principle that since the legislature has failed, tax has to fail, applies with all the more force of the penalty. If the legislature has failed, the tax has to fail. Not only the tax has to fail, but the penalty has invariably. But then, this principle is derived from that basic jurisprudence that the penalty is quasi-criminal. Had the penalty been of civil nature, then probably the purpose of interpretations could have been imported by the courts. So the rule of literal construction, the rule of strict interpretation, because the court said that in the fiscal legislation we have to see the language of the statute. We have not to digress here, we have not to digress there. We have to read the law as it states. We have to construe the language of the statute in terms of what the Parliament has fixed. We have not to supplement or supplant. That is why you are a company, obviously that is applicable. Would you not please your mobiles on the vibration mode? This is my humble request. You are a company, MAT provisions are applicable. You pay tax under MAT. You pay MAT for the reason because your assessed income or your total income which you have returned is less than that MAT income. Your assessment is taken up, additions are made, but even after making additions, your total income assessed is lesser than that MAT. Assessing officer initiates penalty with reference to the additions. But then, can in such a situation, penalty under section 271(1)(c) be levied? Obviously, the logic, the simple logic, the rationale suggests, why should this situation be not caught within the web of penalty? But then, if we scan entire section 271(1)(c), if we scan explanation 4 which defines tax ought to be evaded, now this kind of a situation is not caught within the mischief of penalty. It's not caught. Because tax ought to be evaded, you may have furnished electorate particulars, but then this is the charge that you have furnished electorate particulars. But then having furnished electorate particulars, computation provisions has to come. Now that computation provision fails because explanation 4, which defines that as a result of furnishing electorate particulars of income, there has to be tax which must be avoided, but then there is no tax ought to be avoided because you end up in paying. You end up in paying net, you end up in paying after assessments, even if these additions are not. But then the argument of the department that the MAT credit is liable to be adjusted in future years. Therefore, to the extent that you have furnished electorate particulars of income in respect of your normal income, which is represented by additions, even taxes ought to be evaded to that extent. The court said, no, we have not to see, we have not to go that far. We have to see whether in a situation where you end up in paying MAT despite the additions, can this situation be brought within the meaning of expression tax ought to be evaded under explanation 4? Legislature is silent. Legislature has not contemplated this. You never know that in future, with a retrospective effect, the situation is brought within the street. I mean, you never know. But as on date. So, this is because of the rule of literal construction. The rule of literal construction is because of this underlying principle of jurisprudence that penalty is quasi-criminal. This is the concomitant. This is the consequence. This is the result. This is the proposition which emerges. And that is why, in the matter of section 271 capital B, prior to 1994, the legislature became wiser thereafter, brought amendment to the statute. At that time, the requirement was that the SSE has to obtain the audit report. The requirement of furnishing along with the return was not there. And every SSE used to obtain the report in time, but then every SSE would not file a return in time. The department used to take umbrage. Department used to interpret this position as if the things had been antedated. Things means the audit report has been antedated. But then the court said, you don't have any, except the surmise and conjecture. The requirement of the law is that SSE was to obtain. SSE says that yes, he has obtained. His chartered accountant says that he has given. Then there is a question. We cannot import the requirement of furnishing the audit report along with the return of income when the legislature has not used the appropriate expression in statute. So this is because of the rule of strict construction of the penalty provisions will have to be followed. And this is because that the penalty is quasi-criminal in character. The second consequence of this jurisprudence is that if there is an ambiguity, if any penalty provision is capable of being interpreted in more than one way, there is an ambiguity, there is ambivalence, there is a possibility this way or that way, which side the court to go. So, since the penalties are quasi-criminal in character, the courts have said that if there is an ambiguity, then in such a situation the view favorable to the taxpayers wins. This is because penalties are quasi-criminal in the benefit of doubt. The benefit of doubt will have to be considered to the accused. Oh, I am not saying that SSE is an accused in that sense, but since penalty proceedings are quasi-criminal in character, and that is why, if you remember, for several years, there used to be a controversy in penalty, that if after making additions to the loss return, still the excess income is negative, in such a situation, the penalty under section 270(1)(1)(c) could be imposed upon. Unless that controversy was given quietus by Finance Act 2002 by making an appropriate amendment in explanation 4. And that was because explanation 4 used to give that kind of ambiguity, which could be interpreted this way, which could be interpreted that way. The court said that here is a case of an ambiguity, and when it comes to the resolution of an ambiguity, it will have to be resolved in favor of taxpayer. Because penalty proceedings are quasi-criminal. So, jurisprudence penalty proceedings are quasi-criminal. The consequence is that in case of an ambiguity, it has to be resolved in favor of taxpayer. The third consequence of this jurisprudence principle is that burden of proof lies on whom? If it is a quasi-criminal, and obviously in criminal proceedings the burden is on the prosecutor to prove that here is the accused who has committed this default, who has committed this crime, who has committed this offence. So as a normal rule, burden of proof rests on the shoulder of a person who alleges that the default has been committed. But then Supreme Court said long back in Anwar's case, oh, these are the quasi-criminal proceedings, the burden is on you to prove. Penalty very flat. The legislature became wise. They said, how can we own this kind of a burden? Let us share our burden. The burden was shared. Rules of the game were changed. This basic consequence, which flows from this basic jurisprudence principle of penalty process is quasi-criminal, therefore the burden should be on the person who alleges. The goalposts were changed overnight. Explanation 1 was inserted. That the moment any addition is made, any disalliance is made, it is for you to come out clean. The burden was shifted. Burden which was hitherto on the shoulders of the assessing officer was shifted. And that is why the moment any addition is made, or the disalliance is made, assessing officer issues the penalty notice. It is for you. It is for you to come clean. You have to discharge the burden. You see that why does it not represent particulars of income? Now, but for this change of rules of game, but for this change of the goalposts, the burden of proof would have been on the shoulders of the assessing officer. But in view of the amended law, in the form of explanation 1, this rule that burden normally should be in case of criminal or quasi-criminal should be on the alleged or on the assessing officer for that matter, now has been shifted on the shoulders of the assessing. Men's this is also a consequence, because when you say it is a quasi-criminal, therefore there has to be an element of criminality in your act. There must be mental culpability, there must be an element of mental involvement. That is called technically as manslaughter. Unless there is an element of mental involvement. But then the Supreme Court has said in Dharmendra textile, manslaughter, no manslaughter. And not only Dharmendra textile, the Supreme Court has always struggled, I am sorry to say, has always struggled to say now whether mens rea is a necessary ingredient in the penalty proceedings or not. Because the Supreme Court says that though they are quasi-criminal, but essentially at the end of the day they are of essentially civil nature. Therefore, the Supreme Court always remain in dilemma. Whether mens rea is mental culpability, mental involvement, intention is important. I remember as a member of the tribunal, I had an occasion to deal with this. At that time, Dharmendra Textile certainly was not there. But then this kind of a dilemma was there. In fact, if you remember, 1961, or for that matter under section 28 1C, which is perimeter of section 270 1C of 1922 Act, the word which was there in the section was that the SSCS deliberately furnished with a particular subject. So, normally, the Supreme Court said, when the legislature is using the word deliberately, you must show that where is the deliberateness. You must show the intention. So, the legislature, in its wisdom, because the legislature, though is full of the wise people, 544 to be precise, they became wiser. So they said, out of their wisdom, let us remove this word deliberately. Let us remove this word deliberately. They removed that word deliberately. And they said, now you tell us, we have removed the word deliberately. Therefore, now mens rea is not essential. We have not to prove your intention. Probably they are unmindful. Probably they forgot that even if we have omitted the word deliberate from section 271C, but a very important word concealed is still there. And if you interpret, if you see the dictionary meaning of the word concealed, there has to be an element of mental involvement. It speaks of an intentional or to hide with an intention. Therefore, the removal of the word, the omission of the word deliberately from the statute is neither there nor there. And that is why, after Dharmendra Textile, Justice Aftawalam was one of the three judges which decided Dharmendra Textiles. Justice Aftawalam, sitting with Justice Kapadia in a later decision in Rajasthan Spinners, he clarified that since I was one of the judge of the bench, therefore Dharmendra Textiles decision should not be read to be laying down that kind of a harsh propositions for 271C as is commonly understood. So mens rea has to be there. This is because of penalty is a quasi-criminal. After all, you are alleging, you are fasting not only the debt, but then you are penalizing it. Essentially quasi-criminal. So quasi-criminal is the jurisprudence principle. Its consequences that there has to be. Therefore, you have to prove, assessing officer has to prove that there was an intention. Or if it comes to the assessee will have to prove, sir, kindly see my simplicity, my naivety, that there was no intention. It was an accident. It was an accident. It was a mistake. I remember in one of the cases, it is a case of a cooperative bank. Now, cooperative bank, being a cooperative society, is entitled for a deduction under section 80P. Now, from assessment year 2007, one very important amendment came, according to which a particular kind of income now was taken out from the sweep of section 80P. Interest on the deposits kept by the cooperative societies, that was taken out from the sweep. But this SSE, I do not know for what reason, because as a lawyer or as a chartered accountant, we know only to the extent with which we are briefed. So, the chartered accountant concerned, the advocate concerned, he briefed, sir, I mean it was an accidental omission. Because the law was amended in 2006, from assessment in 2007-8, it was the first return. We claimed exemption under section 80P, and that exemption was claimed to the extent of 3 crore 50 lakhs. The assessing officer confronted the SSC. Why did you claim this exemption or deduction under section 80B? SSC said, sir, I am sorry, and I offer it. Addition was made, but then the penalty was issued. And not only was it initiated, it was ultimately imposed. Now during penalty, SSC took the same stand, sir. There was an amendment which was of very recent origin. We were not acclimatized to it. Therefore, we claimed the deduction. But then, as usual, the assessing officer was bound not to accept it. He did not accept it, penalty was imposed. And you can very well imagine a penalty, 1 crore of rupees approximately was imposed. CITF confirmed that penalty. Now before the tribunal, when the matter came, I contacted the briefing counsel. I said, okay, what happened? Because your assessment is several assessment. Was in 2009. Prior to that, you must have filed your return for assessment year 8-9 also. What did you do? He said, sir, we did not claim. We did not claim exemption. We did not claim deduction. I said, okay, you are saying, I have got every reason to believe you. But seeing is believing. I would like to see your computations. I like to see your assessment order. Now when the computation came, I found, no, they claimed deductions and assessment till 8-9. But then that briefing counsel was reluctant to send me the papers. I do not know why. Strange in the human mind. So he was reluctant to send the paper. But then somehow I extracted the papers. When I got the papers extracted from him, I found that in assessment year 8-9 also the assessing officer disallowed it and initiated penalty. But then I said, if the penalty has been initiated, there must be logical conclusion of it. It must have culminated into the order. And we get to the order. When the order came, it was a 2-line order. That in view of the explanations given by the SSC, the penalties have been dropped. I said, what was your explanation? Because the penalty order was not a speaking order. The explanation was the same. This provision was amended in 2006. We were not aware. I said, when that amendment in 2006 can constitute a reason for assessing officer to believe the assessing assessment in 8-9, at least the same basis must stand on all the more stronger footing in the preceding year. So that bona fide of explanations, in this case, bona fide was accepted by the department in the subsequent year. So when that bona fide of the amendment has been accepted in the subsequent year, there is all the more reason for the department to accept the bona fide as to the amendment, at least in the year before, because by that time the SSC will all the more be more ignorant. So that mental, so long as you are able to prove a bona fide that there was no mental involvement, it was an accident, it was an error. But then kindly to mind whether it was an error, whether it was an accident, whether it was a negligence of the concept. Most of the time the SSC is like this. It is a question of fact. You have to prove it. The other day I was sitting in the tribunal, somebody was arguing that ICAI deduction available for 10 years, that SSC claim for 11th year. Obviously the SSC officer said, you have exceeded the brief of the law to this extent. There's no penalty. Why should it not be? You should not be obliged like your penalty. SSC was obliged. Penalty was liability. The liability was faster. But then SSC kept on claiming, so it was because of the negligence of my counsel. But then as a matter of fact, you should prove. What is being proved? You are retaining the very same counsel till the stage of the tribunal. Now, there is a wide gap between what you say, what you plead and what you do. Now, if a counsel, because of his negligence, is causing this much of loss to you, and that counsel is continuing, I am not saying that the counsel in such cases will always or should always be expelled, I am not saying. But then, you were not hand in glove with him, there was no bona fide in it, you must be left to prove it, you have to read evidence. There can be direct evidence, there can be circumstantial evidence. But one circumstance that you are retaining, that very same counsel now is a strong circumstantial evidence against him. Anyway, let us proceed further. The next jurisprudence principle is that there is no res judicata between assessment and penalty. The meaning thereby that the penalty and the assessments are two separate, distinct and independent proceedings. There is no res judicata. Res judicata is a Latin word, and the simplest meaning of which is that penalty and assessments are two separate, distinct and independent proceedings. This is the jurisprudence. So if this is the jurisprudence, then what are the offshoots of it? What are the propositions that are flowing from it? And if the propositions are this, which I am going to discuss, then how to respond? How to respond in that? So, background jurisprudence principle is that there is no res judicata between the assessment and penalty. Meaning thereby that these two proceedings are separate, independent, distinct. Therefore, the first consequence which flows from it is that findings in assessment, though are relevant, but they are not conclusive. Findings in the assessment order are not conclusive. Therefore, the penalty cannot be imposed simply relying upon the findings in the assessment. Assessing officer is required to reappraise the entire issue. He cannot simply say that since this addition has been confirmed and appealed, therefore it becomes a ipso facto case of negative penalty. No, if he says, then he is defying that basic principle that there is no res judicata between the assessment and penalty. Findings may be relevant, but then they are not conclusive. And the second principle, second consequence which emerges out is, I therefore am entitled to furnish fresh evidence during penalty proceedings. Because if this principle has not been there, then I was prevented with the authority of law not to furnish additional evidence. But since the jurisprudence is that there is no res judicata, since these proceedings are two separate, distinct and independent proceedings, therefore the law does not obstruct my way in furnishing additional evidence to set up a new case altogether and to plead something which I have not pleaded. I remember it was a case where during assessment the assessing officer asked us to prove purchases from two parties. Those could not be proved, those were bound not to be proved because those parties were not there. Additions were made. Additions were made. We tried to prove or take whatever kind of pleadings that could be on this earth to set up our case. We failed miserably till the stage of trial. Assessing officer, having initiated penalty, asked us if penalty, why the penalty should not be levied. We took a complete U-turn. We set up a case based upon this principle that there is no res judicata between assessment and proceeding, assessment and penalty. Sir, these purchases were only paper purchases because the corresponding sales are also paper sales. So neither purchases are genuine nor sales are genuine. During assessment, we have verified only one limb of the transactions. In penalty proceedings, we are exposing ourselves in offering you to verify the sales also. We are ready to deposit. We are ready to deposit your entire expenses for conducting necessary investigation. Now, when that kind of reply went to the assessing officer, he was flabbergasted. What kind of a U-turn is it? Now, till yesterday you were trying to prove to the hill before the tribunal that your purchases are genuine, but here all of a sudden you have taken the U-turn. Is it permissible? He said, no, it's not permissible. Therefore, the first question, now which became material before the tribunal, now whether that stand which I in revenue took in the quantum proceedings, whether it obstructs my way. No. Tribunal said no. There are two separate, independent and distinct proceedings. You can set up your case. Now whatever consequence of setting up a new case altogether will be there, or you will have to bear it. But your way cannot be obstructed. So we said, sir, in order to avail, in order to show a rosy picture to our shareholders or to our bankers for that matter, I mean, paper sales were taken, paper purchases were taken, and if you eliminate the impact of both, then there is no tax ought to be paid because they were almost at par, with negligible profit. Rather, I showed some profit. But the assessing officer, no, these are the additional plea, these are the fresh plea, these are the additional evidences. How can? No, assessing officer was not right. And that is for the reason because there is underlying jurisprudence that there is no res judicata. I am entitled to adduce. I am entitled to make a fresh plea. I am entitled to adduce. So, during assessment proceedings, say some commission has been disallowed for the reason that you have not been able to procure the necessary evidences. That may be because you were not having a good relationship with the commission agent. Your fate may have been sealed in quantum proceedings, but then when it comes to assessing officer gave this observation that despite opportunity, assessing did not produce all those evidences which can be there to prove identity, capacity, genuineness were always there. But at this finding, I said, my lord, how does this finding come in the way of proving the genuineness of the transaction? But you know, the SLP, special leave petition, it is often called as special luck petition. Because that is equity jurisdiction. Even if you are able to show that miscarriage has been done, it is not